Good morning. The Indian equity market appears set to establish its hold. For all those who wake up early trying to track how the Nifty is performing on the Singapore Stock Exchange, there will probably be another breed of investors who will now stay awake to watch how the Dow and the S&P 500 are being traded on our exchange. Dow and S&P 500 would very soon now be available on the NSE in Indian rupee terms. Meanwhile, stocks appear to have settled yet into another consolidation phase with no substantial news flows to trigger direction. Traded volumes have been a bit disappointing even as flows from the FIIs have improved. The post-budget feel-good factor, which actually coincided with the global optimism, seems to have ebbed slightly. For lack of other things, fourth quarter results, RBI's annual policy meeting and monsoons could provide fresh direction going ahead. On the global front, it is going to be a mixed bag of emotions. External events could surprise on both sides. They could be negative as well as positive. Today we expect a flat to a slightly positive start. US indices have gained overnight. European stocks too advanced, while the Asian markets are trading mostly in the green zone. On the technical front, 5,150 is proving to be a tough resistance for the NSE Nifty. If it manages to surpass this barrier, the next obstacle could come at around 5,190 to 5,200. On the downside, strong support is expected at 5,000. The government is considering FIs to guarantee bonds issued by the infrastructure companies. NMDC FPO receives bids for 17% of the shares on day one. RBI data indicates that second half bank loan grew by Rs 376 billion. Domestic steel prices may rise in the next month on higher input cost. Elsewhere in the world, the US money deficit stood at record $221 billion in February. Japan's quarter 4 growth has been revised down to 0.9% as versus 1.1%. Bank of Korea has kept its key policy rate unchanged at 2%. Australia's unemployment rate has gone up to 5.3% in February. China's consumer price index is up 2.7% from year earlier, about 2.4% of forecast. Moving on to the recommendations, McLeod Russell. Traders are recommended to buy the stock in the range of Rs 242 to Rs 247 with a stop loss of Rs 236 for target of Rs 265. Orbit Corporation. High-risk traders are recommended to buy the stock between the range of Rs 295 to Rs 299 with a stop loss at Rs 288 for a target of Rs 315. On the F&O side, we have long Tata Power March future at Rs 1,343 for a target price of Rs 1,400 and a stop loss is to be placed at Rs 1,320 for a lot size of 200. And long Bombay Rayon's Fashion March future at Rs 218 for a target price of Rs 228 and a stop loss is to be placed at Rs 214 for a lot size of 1,150. That's it. Thank you and have a great day ahead.